Hello, this is Bob Joyner, and in this video we're going to be taking a look at AMC stock. And on the screen here is a daily chart, obviously showing a lot of consolidation. We're going to drill down to the 1-minute chart and look at some intraday trading strategies. One of the things we do know is that AMC has plenty of volume. So if we look back, I'm recording this on the 4th of July 2021. If we look back at Friday's market, AMC had 90 million shares traded, so it has plenty of volume. We know that. So one of the first questions to ask if you're going to be trading AMC stock is, what is your time perspective? You're looking here at a 1-minute chart of AMC stock. We're going to look at day trading AMC stock, and we're going to look at a couple of basic ideas and indicators to help you manage the trade. Plenty of volume, as we already looked at. So what are some basic indicators we can look at? On this chart here, this is a 1-minute chart of AMC, and I have just a couple of indicators up here on this top screen. I've got pivot points, I've got VWAP, and I've got an exponential moving average of 18. Down here on the bottom, I've got Stochastics with just the default settings, as you can see there. And on the Stochastics, I have green set at 80, a dashed line set at 0, and a red line set at 20. Alright, so that's the basic chart setup for the 1-minute chart. Let's go back to Friday just for review. So if we go back to Friday, and this grayed out area here is pre-market and after-market activity. So we want to concentrate here on what happened after the market opened. And the basic idea here is that you can use VWAP as your basic line of delineation. So for example, if price is below VWAP, then overall you want to be short. And if price is above VWAP in day trading purposes, then you want to be overall long, right? And you can see how price crossed up through that at this line here, and then we came back down, found support there just before the market closed on Friday. So let's go back for a second. Now let's look at some things that happened. And what we can see is back down in here in this area where Stochastics comes back above the 80 line. Okay, and it doesn't happen very much on Friday, but a couple times you have where Stochastic comes back up here above the 80 line, looks very bullish, and we're coming up here to test VWAP. So if Stochastics is coming up into a technically overbought area and prices up to an area of overhead resistance, then it's kind of like a whack-a-mole game where price is probably going to get shoved back down at that point of resistance. And we come back up again, whack-a-mole, back down again. Okay, and that is pretty much true. Every time you get back above 80 here, you can see we get whack-a-mole back down. Right now, all that changes, of course, once price moves above VWAP. So the basic idea is this: is when Stochastics are giving you an overbought reading and price is below an area of overhead resistance, then you want to be entering a short trade. So you'd enter a short here, come down and take some profit, enter a short here, come down and take some profit, enter a short here, come down and take a profit. Okay, and over again until we cross back above VWAP right in here. And you can see where the 18 EMA, you can use that as your definitive guide. Let's say if 18 EMA is below VWAP, then every time Stochastics becomes overbought, that's when I want to short. Whack-a-mole, 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 right? And the reverse is also true. So if now the 18 EMA is above VWAP, which it is this whole rest of the day there, then every time we get down to below the 20 line, I want to go long, right? I want to go long, I want to go long, I want to go long. All right, now where's your stop going to be? Well, your stop is going to be if that 18 EMA crosses back below VWAP. Okay, so we come down here and test VWAP, but the EMA, 18 EMA, does not cross below it, and we come back up to an area of known resistance, being the S1 line here, the pivot line. So you can play that little game over and over again, but where's your stop? How much are you risking? Your risk is somewhere below. If you're going long, your risk is going to be the distance from the current price to your stop. So if your stop is going to be below VWAP every time we come back down here, and we're oversold in this case since 18 EMA is above VWAP, right? Then where's your stop going to be? Well, your stop is down there, and you can actually measure. I'm using TC2000. You can left click here and just drag that down, and you'll see that your risk in this case is 1.65%. So we're looking at several different things. The 1-minute chart to drill down and look at overbought, oversold situations within the context of an 18 EMA and a VWAP. And then we're also measuring risk based on an approximate area where that would be violated. In doing so, you know how much equity to use on the trade, and you know what your probabilities are, you know what your stop is, and you can trade confidently in and out of that knowing that you've got plenty of volume. So I hope that this short discussion of AMC stock can help you become more profitable trading it and give you some technical analysis ideas for how to day trade the AMC stock. There are some links in the description box below this video if you'd like to check out some other topics discussed inside this video. Thanks.